You know what I think about these numbers? I think they're all bogus because they're just made up, right? I mean, they're all the birth-death ratio. They've all got these seasonal adjustments. I said, what's really important to me is what they revised last month and the previous 2 months, because no one looks at the revisions. They only talk about the number. And so I think if you go back and you look like over the last year, it was like a third of the reported jobs vanished in the revisions. So they weren't really there. I mean, it's like a tree falling in the forest. If there's no one there to hear it, it didn't happen. If the job really didn't exist just because you said it did, it's like when you put a big number on the first estimate of GDP and then you revise it down, like, well, it was never the high number. It's the actual number.
Today, we have major hedge fund manager Mark Yusko discussing his outlook for the market conditions we're seeing, as well as the influence that the stock and crypto markets are having on Bitcoin. Yusko also discusses his financial prospects for the next few months, as well as whether or not there is an end in sight. While Bitcoin is currently feeling the volatility in the market, investors see the last few months of the year as a big opportunity. Yusko believes that the current trajectory is merely a foreshadowing of what is to come. We'll take a look at his latest prediction and investment thesis for the stock, crypto, and capital markets. Stay tuned to the end of the video to hear Yusko's predictions on a coming meltdown, recession, inflation, and the impact of interest rate hikes on financial markets. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
The thing that I think is interesting is we created QE. When I say we, meaning they, so they, the Fed, and well, maybe we don't all know, but the Fed was created to support the banks, right? It's a private corporation that supports its members, which happen to be the banks, and that's what central banks do. And they're the lender of last resort to those banks to make sure that they can maximize their profits. And so when they cut interest rates to zero and started buying bonds, what were they doing? They were essentially bailing out the banking mistakes of the global financial crisis, right? The banks vaporized their balance sheets, right? Totally destroyed their balance sheets by over-levering. And again, leverage is just a tool. It's not inherently evil. But as the great Howard Marks says so eloquently, leverage can never make a bad investment good. Can't, right? It can, and often does, unfortunately, make a good investment bad because you're forced to sell at the wrong time and your equity disappears. So like if you buy a house for cash and the price goes up 10%, you make 10%. That price goes down 10%, you lose 10%. But no one can take it from you because there's no liability. It's yours. If you buy for 20% down, 80% mortgage, 4-to-1 leverage, and the price goes up 10%, you don't make 10%, you make 50%. I love leverage. So let's do 10-to-1. Let's put 10% down. Price goes up 10%. I made 100% on my equity. The price goes down 10%. All your equity vanishes. All of it. So all of the bank equity vanished. I mean, I think I've told the story on the show. I was with Chase Coleman in 2009, early 2009, right when QE started. And he crushed it in 2007, 2008. He short all the banks, short the financial companies, tonned it. I mean, the markets were down 52% peak to trough. They were up well over that. But in 2009, market took off. After Obama said, hey, buy stocks. We got your back on March 9th, 2009. And by this time, November of 2009, Chase was down like 10% and the market was up like 20%. And I walked in his office and he literally throws this thing at me. He said, look at this. He says, that's Citigroup's balance sheet. They are bankrupt. Their liabilities exceed their assets. There's no way this stock should have any value. I've been short. I shorted it from $100 down to $1. Now it's $5. And he said, and then it hit me. it's inconvenient for too many people for Citigroup to go to zero. And he said, I'm not shorting banks anymore. And that epiphany, right, that they weren't going to let those banks go, right? There was no chance Goldman Sachs was going away. Now, Lehman, he could let that go because they didn't like the guy who ran it at all. Like, they really just didn't like him. Bear Stearns, they didn't like the way they were scalping arbitraging certain markets. And the big guys were like, yeah, we could get rid of them. And then we would make all the money. So let them go.
Emerging markets are relying on digital currency, and Yusko believes that based on the current market outlook, decentralized finance will take over and usurp the roles of most financial services companies. After the continuation of more banks collapsing under pressure, fiat currency is proving to be one of the most unreliable monetary stores of value.
It's unique, right? We've never had this before. We've never had a technology that you can own directly, right? You can't own electricity. You can't own TCP/IP. You can't own, all kinds of technological innovation over the years. And you can own companies that do things with it. You can own apps that sit on top and use TCP/IP. But now you can actually own the blockchains themselves. And that's pretty interesting. Now you could say, well, they're like companies, but without humans and without boards and without, so fine, you could say that. I mean, as opposed to just a pure technology, but really it's a technology. And look, I am struggling a lot with, I'll make the Maxis happy for a second, with this idea that Bitcoin could become the global settlement layer for all assets in the world. It's actually, I'm coming around to the idea that it's actually possible. That not just it's a better form of money. It is, right? Digital gold. It is a better form of money. But it actually, my on-chain monkeys guys have settled multiple projects onto the Bitcoin blockchain, like valuable assets, whether it's the original, Genesis monkeys, or whether it's this Dimensions 3-dimensional mint they did, or whether it's the Bugatti eggs, right? These are $200,000 collectibles that, are settling straight to Bitcoin. And if you think about this whole decision, if you have an asset, whatever that asset is, title to a house or a stock certificate or, money, you probably feel pretty, you want to hold on to it, right? You want it someplace safe. And what did that mean in the old days? Bank vaults, like big buildings with columns and thick walls and multiple locks. And you put it in there and you had a key to your safe deposit box and it was safe until the bad guys came in and cracked the safe and stole all the stuff. So then we figure out this DTCC thing and this digital thing or this electronic thing. And so we have electronic, but stuff still gets stolen. Well, now we have digital, which is an enhancement over electronic, which is an enhancement over analog. And there's these different mechanisms for asserting proof of work, proof of stake, proof of history, proof of whatever. Proof of work is superior from a safety and security perspective, at least for me, right? Just based on the power of the network and the amount of compute. And that's the other thing is, the longer you're around this, the more you realize it isn't about speculating on tokens. I mean, that's fine and it's fun maybe, but it's about understanding the technology, the base technology, and how it's being integrated in this giant S curve. Right? We're 10% in to adoption, which means we got somewhere between 10 and 20% adoption, depending on what project you're looking at. We got the whole upside of the S curve to go. And it's that technological evolution and adoption cycle that's really unbelievable. That's why I'm out here in California at 5 a.m, talking on the tube.
Yusko anticipates that the crypto summer will continue its scorching run until June of the following year. The crypto market is poised for a meteoric surge in prices. He illustrates Bitcoin's current undervaluation, drawing in investors and enticing speculators eager to ride the waves of September's price fluctuations in pursuit of profits. Yusko's outlook is fueled by the impending wave of mass adoption, which he believes presents an unparalleled opportunity to get in on the action. He sees the race toward a six-figure price target set to unfold in just under a year. What's more, he highlights the intriguing historical pattern of Bitcoin's value surging 10x with each halving event, hinting that 2024 could catapult Bitcoin from $10,000 to an unbelievable $100,000. What do you think about Mark Yusko's prediction for Bitcoin, the crypto market cap, as well as the institutional capital pouring into the space? However, Yusko asserts this journey is just beginning, comparing the initial years to the current widespread interest and investment, with a giant spotlight on Bitcoin ETFs. Highlights this being a significant development in the financial ecosystem. He also suggests that BlackRock, under the guidance of Larry Fink, will lead the charge in obtaining regulatory approval for a Bitcoin ETF. This move, he contends, will underscore Bitcoin's enduring relevance as an asset and its potential as a hedge against currency devaluation. Don't forget to like and subscribe if you enjoy the content we do here on this channel. We'll see you in the next video.